Okay, then let us do the final touch-ups before your exam tomorrow. And this is just a mock exam. Here's the information. So we've got very nice car dealership, which is owned by the Angela Theatre. The financial year ended 28th of February 2023. The stock records of the following products are provided. We've got sports cars and modification kits. Basically, modification kits enhances the car power up to 250 kilometers per hour, handling and or efficiency of the car. That's what modification is, or the modification kit does. So modifications are made to the engine, exhaust system, air filter, brake, suspension, and tires. So we've got sports cars. The stock of sports cars is valued using specific identification valuation method. And this is what we have as these cars. So we have three types of cars. The first one will be BMW M3, C63 AMG, and Golf R. And for each of those cars, we given units on hand on the 1st of March 2022, which is the beginning of the financial year. Units purchased during the year, then we've got units returned to suppliers, units sold, and units on hand at the end of the year. And you'll notice that for C63 AMG, that is a question mark. So we don't have units on hand for for C63 AMG. Then we've got cost price per unit. Each unit of BMW M3 will cost you 1.8 million. C63 AMG will cost you 2 million, and we don't have the cost price for Golf R. Then we are given closing stock for BMW M3. You will have 39,600. For C63 AMG, it's a question mark. Golf R will also be a question mark. And you were given the selling price per unit for each type of a sport car. And the cheapest that you'll notice is Golf R. AMG C63 is the most expensive, and second to that, 300 less than the C63 AMG will be BMW M3. I actually took these from respective websites. So yeah, that's what I got from the respective websites, obviously. So for BMW, I went to the BMW website. For C63, I went to the Mercedes-Benz website, and for Golf R, I went to VW website, and these are the prices that I got them. So we've got total sales in balance. For BMW M3, it was 81 million, and C63 AMG it was 120 million. For Golf R, it was 44 million. Now we are given markup percentages for each. The one that has the highest markup will be that Golf R. All right, good. And then we're given more information. I'll come to our modification kits. I just want to focus more on the first question, which wants us to calculate the closing stock on the 28th of February using specific identification method. So specific identification method simply tells you that if a product costs you, like for instance here, for what? Let me see which car we started with. C63 AMG. How much did you buy each C63 AMG? We bought it for 2 million, right? So whatever car it is, as long as it's C63 AMG, the cost price of that car, we can easily identify it because it's in small quantities. And we can tell that this car, we bought it for 2 million rand. So we don't use any other method. We use the direct method, which is the original cost price of that specific car. Obviously, it's the same model, but for that gray AMG, it is 2 million. For that green AMG, it is 2 million. So we know that it can change. That is the cost price. So it's easy for us to identify the cost price of each unit. And on that note, where we're dealing with the EMG, they want us to calculate the closing stock on the 28th of February using specific identification method. So whatever stock we have in the warehouse, that will be, we'll just know that each item in that stock will be 2 million rand. And for me to determine the cost price of the AMGs that are still on hand, I have to use what I've got there. I've got opening stock. So I'm going to add that with purchases, and then I'm going to minus the returns, which is 1. So it is 2 plus 60 minus 1. And when I do that calculation, I'll be calculating the number of units that were available to be sold. Number of units available to be sold. So it'll be 2 plus 60 minus 1. So it's basically opening stock plus purchases minus returns or any damages. That's how you calculate units available to be sold. Then we're going to take those units available to be sold and then subtract the units that were sold. So if here the units available to be sold, I think will be 61. So of these 61 units, we sold 40. So if we have units available to be sold as 61 and we only sold 40, it means the value of units on hand will be 61 minus 40. So units available to be sold minus units sold. That's how you will get the value of your closing stock, or the number of units of closing stock. And that is exactly what I'm going to do to calculate the value of my AMG's closing stock. So I calculated units available to be sold first, which is 61, and then I subtracted units sold, which is 40. I got units on hand. I know each unit will cost 2 million rand. So if I want the value of closing stock, I'll just take that 21 and multiply it by 2 million rand. And that'll give me 42 million rand. All right. Now we need to calculate the value of golf hours. And we're going to do the same thing. We first have to determine units available to be sold, which will be 98 minus those that were returned to the supplier, which is 5. It's weird here because we don't even need to calculate it. But let's try and calculate it to see if that value, that 38, is indeed correct. Okay. Because sometimes you get these questions in the question paper and you notice that, oh, this is incorrect when you try to calculate it. If it is incorrect, guys, you use what you were given as the value of closing stock, which is that 38. But I'm going to try and see here. It's 38. It's 8 plus 90. And then I'm going to minus 5. It gives me 93. And then minus the number of units that were sold. It should give me 38. Oh, thank God I didn't make a mistake here. So those 38 units, the problem with that 38, we don't have the cost price per unit. Interesting. However, check what we're given. We're given the selling price per unit, which is 800,000, and we're also given the markup. So I can just take the 800,000 times it by 100 divided by 160 to get the cost price per unit. And then use that to calculate the value of golf hours on hand. So it's 38 times 100 divided by 160 times 800,000. It's the same thing. It's multiplicative identity. If you have done maths, you'll know what I'm talking about. So 800,000 times 100 divided by 160 will give me the cost price of each golf hour. And if I take 800, okay, 800, then you're going to times it by 100 and divide it by 160. Let's see what you get in there. The cost price will be 500,000, but we've got 38 golf hours on the floor, and that will give us 1.9, which is the value of closing stock of golf hours, which will result in us having 19 million rand. So if you calculate, we were given the value of closing stock for BMWs and threes, which was 39,600. So basically, the total will be just the sum of everything else. And that'll give you 100,600,000. What is the business risk associated with these cars? Do you really want to put these cars in the same floor? I wouldn't. With that, I will only keep like 2 or 3 in storage, but I'll keep them in different storages. Because if you put them in one storage, in that building, there's catch fire, guys. You ruined. That means if all these cars are banned, you have lost 100,600,000. And you know that if one catches fire, all of them might catch fire. And it's easy for any building to catch fire. Probably there's a mistake with a bulb, and then it catches, the ceiling catches fire, and the whole floor is in flames, and you lose everything. 100,600,000. I wouldn't keep them um in the same building. I will keep them in different buildings, obviously. But now that will increase my storage costs. Yeah, difficult choice indeed. All right. Now, let's go to modification kits. Okay. The next question here asked if provide 2 points that show that D'Angelo Sieta and his customers are happy with the quality of C63. Let me see. The value of closing stock for C63, we've got 21 units on hand, while else for Golf R is 38. What was BMW M3? What was the value of closing stock for BMW M3s? M3s left were 21. But look at the purchases of C63, all right? So it was 60, and only one of those C63s was returned to the supplier. We sold more of C63s, all right, than we sold uh, the BMW M3s, even though Golf Rs are higher. We sold more Golf Rs, but you need to look at this as well. Golf Rs are cheaper. Probably that's why we sold them. And we know that 5 of those were returned, only one for C63. So I'll say that it's because they trust the brand. Only one was returned to the supplier. Only one was returned to us in essence. Because whatever is returned by the customer, we will take it and return to the supplier. Only 163. That shows you that actually customers are happy with C63. And it costs more, but they still buy it instead of buying M3. And I think it's because of the quality or the status, or what the impression that Mercedes-Benz has created that their product is of good quality. And it's true when you look at it's not that they are of good quality, it's just the people that are buying Mercedes-Benz are more, how can I put it? They're very conscious, and they're more, they behave okay, unlike BMW drivers. BMW drivers, they don't mind putting that thing on a high speed, or else you won't find it. You hardly find a Mercedes Benz guy doing that. I don't want to say, oh, BMW drivers are reckless drivers, but I don't think BMW has an indication button because they hardly indicate to those guys. Um, Somehow, yeah. Let me just keep quiet. BMW fans will bury me alive. And that's what I can say here. It is more expensive than the other cars, yet has the highest sales in a year, and only one was returned. That's what shows you that AMG C63 is of good quality, and we are happy as well as the customers. All right, that's it. Now let's go to modification kits. I explained to you what a modification kit is. And for modification kits we use periodic inventory system and the first in first out method. So whatever we bought first will be the first one that we sell. Stock valuation method is applicable. These items have a shelf life of 90 days. That's why we apply first in first out. The supplier allows the entity to return purchases within 14 days, and that's why we have to use first in first out method for modification kits. So basically, at the beginning of the year, we had 110 kits, and on the 28th, we had 100. So we are given the number of closing stock. If you are not given number of closing stock, you will have to calculate it by taking number of units available to be sold and then we minus units sold. That's how you will get your closing stock. Let me just read further. We are given coverage on purchases. This is what we paid to bring these modification kits to our business premises. So the business pays Vela P Transport a fixed rate of 800 for modification kit delivered to the store. Oh, that is so interesting. If you know Vela P, you will know why it is so funny. And then we have return to supplier. So we return 6 modification kits were returned to the supplier on the 7th of February 2023. And what I spoke about earlier on, where the supplier allows us 14 days, it tells you that if I return these goods in February, on the 7th of February, they must have been bought in January. So they can't be bought in December 2022. They must have been bought in January 2023 because we're only given 14 days. Okay. The supplier reversed the total cost price, excluding carriage and purchases. So that's simply telling you that when you calculate the cost price of modification kits returned to the supplier, you do not subtract carriage and purchases. Okay, so because that is forfeited, you will get that money back. Okay. And then they say to you, what am I saying? Actually, you did not subtract. They said excluding carriage and purchases. So we won't get a refund for that from the supplier. I understand that principle. Once you paid for transportation costs for that modification kit, there's no way that you can claim it back from the supplier. All right. We'll talk about this when we calculate it shortly. E says that sales and cost of sales, each modification kit is sold for 100,000 Rand, which is good. Okay, so what is the first question? The first question is asking us to do what? Specifically, we need to calculate the values of A to E. I'm going to start with A. What is A? A is the total cost price for November purchases. This is so funny. You will see why I'm saying it's funny. Because most of my kids got the calculation of A, B, C, D, E right. But when it went down to answering the question, they showed me flames. And this was just a build up. I was trying to show them how the cost price is calculated so that when they get to the question that requires them to think, it'll be easy for them to think. But yeah, I don't know what happened there. So to calculate A basically is the total cost, which will be the cost price per unit is 92,000. You're going to times that by 66. Carriage will be 52,800. Well, they didn't say anything about carriage, but what I know is that for 66 units, my carriage will be 66 times 800. So let me see if 66 times 800 will give me what they have there, which is 52,800. So let's say 66 times 800. So that will be my carriage, which is 52,800. And the modifications that we purchased were 66, all right? And they gave you unit prices per modification. So I will simply add 92,000 per modification. We have 66 modifications. What did I do now here? So this is supposed to be times, okay? And I will get 6,124,800, which is basically the value of A. Okay, so A will be 6,124,800. Let's get to B. What did they say about B? B is just carriage. All right. For B, I will just take 36 times 95. It's 36 times 95. This is the unit price. So it's 36 modifications times 95. That'll give me B. Let's see how much we got as B here. And B will be 36 times. What did I say here? It's 36 times. I'm lying. I'm looking for B is courage. Okay, for cost price, it'll be 36 times. I'm trying to calculate C there, I guess. All right, so it'll be actually B is 36 times courage. Courage will be 800 per unit. So it'll be 36 times 800. So it'll be 36 times 800. That is correct. So when we calculate the value of B, it'll be 36 times 800, which will give us 28,800. Okay, let's go to C, which is what I was trying to calculate there. So for C, you just have to take that 36 times 800 and add it with 36 times 95. Okay, 36 times 95,000. 36 times 95,000. How much will this give us though? So you're going to add that with this 36 times 95 to get C. You'll see what I mean shortly. So for us to get that C, we'll just add courage with the cost price, the total cost price of those 36 units. That'll be 36 times 95 plus 28,800. That 28,800 is just what we got in B, which is your courage. That'll give you 3,448,800, of which most students got right. Okay, now let us calculate D. All right. For D, you will just add all your courage on purchases cost. So you will just add all of those up. It'll give you D. And you will add all of these up. That will give you C. That will give you E, right? And that's how I calculated D as well as E. Easy peasy, right? It was easy until we got here. Now they need to calculate the value of closing stock on the 28th of February using the first in, first out valuation method, of which we were given how many units were there as part of our closing stock. First in, first out, you do not care about the units sold. You only care about the units that were not sold. That's what first in, first out is all about. You focus on the units that were not sold. And then you ask yourself, which units from your purchases, which units should be part of your closing stock? And to do that, you will ask yourself, of the 100 units, you will start with the latest purchases, which is this 36, all right? Of this 36, before I even look at that 36, I'm going to go to that point about returns just to see, is there any units of which are part of that 36 that we returned to the supplier? They said here, we returned 6 modification kits on the 7th of February 2023. The supplier reversed the total cost price paid, the total cost price paid, excluding carriage on purchases, all right? So what does that actually mean? It means that of these 36 units, which are January purchases, we are only left with 30. Of that 36, we are only left with 30 units. Of the 36 units, we're only left with 30 units. And know that in total, we have 100 units left. Now, if 30 comes from January purchases, it means that 70 should come from November purchases. But from November, we can only have 66 units. So if you add 66 and 30, that will give you 96. We still have 4 modification kits. So since all of that is still on hand and 30 of this is still on hand, it means the other 4 comes from the April purchases. You got that? All right, let's see if you got it. So I will first find the cost price of the 30 modification kits that were not sold, which is from your January purchases. The cost price per unit there was 95, and we've got 30 units left. And you need to remember that the cost price of each unit is 95,000. But that is not the only cost price. The cost price will also include the carriage on purchases. So of the 30 units, obviously those 30 units, the cost price will be 95 rand per unit, but you are going to include transportation of that, which is 30 times 800, because they told you that transportation will be 800 rand per unit. So the cost price of those 30 units that were not sold will be 30 times 95,000 plus 30 times 800. Okay. So that'll give us the cost price. Probably you are wondering, but why did you multiply by 95,800? It is because I took the cost price, which is 95, and I added the 800, which is for transportation. So those 30 units that are left in total will cost us 2,874,000. That's it. You good? Like, now we will go to the November purchases, which is all those purchases, November purchases were not sold. All those units purchased in November were not sold, and the cost price of all those units was A. Otherwise, you can just take 92,000 times 66 plus 52,800, which is what most students got wrong, and I didn't understand how. All right, from April, we had 4 units. So those 4 units, the cost price of each unit from April purchases was 84. So I just added 800 to 84 to get the total cost price, including carriage. And most students just added 8,800. That carriage of 8,800 is for all 11. And they told you that for each unit to be transported, it is transported by Vela P. Remember Vela P transport. For each unit to be transported, it's 800. So it'll just be 4 times 800. But they decided to add that 8,800. I don't know why. And obviously here, when you calculate the cost price of April to September purchases, it'll be 84,800. And then you just add all of these up. It'll give you the value of your closing stock, which will be 9,338,000. That's it. I will give a mark for that because this is out of 5 marks. So I will not give mark for that because I already gave you a mark for that over there. Okay, that's it, guys. Now, 1.2.3 wants us to calculate the sales value. First of all, you need to look at the number of units that are available for sale. Your number of units available for sale will be your opening plus purchases minus returns, which is this, plus all your purchases, which is that, and then you minus the 6 units that were returned, which is the 6 here. It'll give you units available to be sold. I hope I'll get this right. I hope I memorize them. So that'll be 110 plus 113, and then you minus 6. It should give us 217. So those are the number of units left, modification kits left. Now, available to be sold, sorry. And then you subtract the value of your closing, and that should give you your sales. So we sold 177 units, and they told you that each modification is sold for 100,000. So in total, your sales value, so it was the number of units sold multiplied by the selling price. Therefore, your sales value will be 1,170,000. Done. Then they say to you, the Angela says, I noticed that 3 modification kits are missing after an anonymous whistleblower reported that Prince News has been stealing modification kits to make money on the side by modifying cars that are part of the local spinning competition. He can only determine the rand value of the loss by using weighted average method. Using weighted average method, calculate the rand value of the loss. First of all, I need the weighted average cost. And you remember the formula, right? If you've watched the previous videos, you will know the formula for calculating weighted average cost. It's simply your opening value plus your purchases plus your carriage on purchases. And then you divide that by the number of units opening plus your purchases, right? And then you minus your returns, which is what I forgot to mention here. So that's how we'll calculate the average cost. It's opening plus your purchases minus returns or damages, and then you add your carriage on purchases. In the denominator, it is your number of units of opening plus the number of units that you purchased, and then you minus the number of units that you returned. That's how you calculate the weighted average. Now, I'm going to go back there and check what the value of my opening units was. It was 8,888,000. I'm going to add it with E because E represents my total purchases. What did we get as E? E was that 10,506,400. And then you minus the returns. Now, what will be the cost of the returns? It's 6 units. They were bought in January, right? 6 units that were bought in January. But when you calculate the cost of those goods that were returned, you will exclude carriage. So it's just 6 times 95,000. All right, let's get to it. So I'm going to take 8,888,000, add my purchases, which is E that I told you about, and then you minus the returns, okay, which is 95,000 times 6. I can't take 95,800 because we won't get reimbursed by the supplier. So the cost of goods returned will just be the cost price we paid for those goods. It will not include carriage because the supplier will not reimburse us for that. Okay, so basically it will form part of these goods, the carriage of these goods that we return will form part of your average cost, which will increase the cost price of your closing stock. Jeez. And when the cost price, because we use the weighted average cost to calculate the value of the closing stock, and closing stock is high, it means cost of sales will be lower, and the lower cost of sales will result in a higher gross profit. But at the same time, it means that the value of your closing stock will be overvalued, therefore boosting your balance sheet. All right, so number of units of opening stock will be 110. We purchased 113. We returned only 6. And this will give you 86,748,39 per unit. Now, we lost 3 units according to this, right? So those modification keys that were lost, to calculate our cost price, I'll just take that 86,748,39 multiplied by 3, and that will give me 260,245,16. That's it. Easy, right? All right, then it says the Angela Caesar decided to reduce the closing stock levels, determine the percentage by which he reduced the stock levels. So you're going to compare stock levels at the beginning of the year to stock levels at the end of the year. At the beginning of the year, we had 110 units, and at the end of the year, we only had 100 units. So it's always new minus old divided by old, right? So new closing stock is 100, you minus the old, which is 110, you divide it by the old, which is 110 times 100, it'll give you 9,09. This 9,09 is a decrease because you've got a minus, it means it was a percentage decrease of 9,09. Okay, then they say give two probable reasons why he decided, well, he chose to reduce the stock levels. The reason why he decided to reduce the stock levels is because they told you that they can only last for 90 days. I don't remember where I read that, but I remember reading it. So we expect our stock to last for only, you see, the shelf life is 90 days. So we're gonna have a lot of this. So that's why we have to reduce the number of units we have on hand. Another reason could be that people now want to modify their cars and sales increase, all right? And also, the more stock you have on hand, people, there's a high risk of theft and storage cost, holding cost. That is why you will try by all means to reduce your stock levels at the end of the year. Another reason is that you don't want your money to be tied up in closing stock. For instance, let me just give you one example what I meant by that. When we calculated the value of closing stock for modification kits, it gave us 9,338,000. Are you aware these modification kits are there in the warehouse and their value is 9 million? That means that 9 million is just sitting there on the floor. Well, else you could have invested this to buy property somewhere else and renovate it and sell it at a higher price. Buy property in Sentin and sell it at a higher price. So your money is tied up in stock. And you don't want your money to be tied up in stock. And when you get to varsity, you'll learn about stock holding cost. When you hold too much stock, for that stock to be there, you need to have security because it will be stolen. You might need to do something, probably there's temperatures, I don't know, with modification kits, you need to keep it under a certain temperature. I haven't really read my oil container, car oil container. Probably you need to keep it under a certain temperature. Probably you must only keep them separate or whatever. And then all of that will increase holding costs. So the more you hold stock, it'll cost you more. So that's why most businesses don't want to hold too much stock. Um, how was this question answered in the exam? It was those that got it, and those that didn't. You just had to read carefully and remember everything you planned. And that will be it with respect to question 1A. Let us go to question 1B. Question 1B is about VAT. All right, we have information still relating to very nice car dealership. And you are required to read that information and complete this table over here. Please note that we are given the amount owing to SARS, which was a VAT output, and that was 500,000. So whatever we do here, we adjust VAT by, we need to decide whether it's VAT output will increase that 500,000, VAT input will reduce that 500,000. They already gave you the base, which is VAT output. Even though it's positive, I would have put it in brackets so that I know VAT output, all of them will be in brackets. VAT input will be without brackets because that is what we can claim back from SARS, okay? And let me read as to what is happening here. The first one says that we sold 110 modification kits for 115,000 rand each, not all of them, each is 115,000. And then they told you this includes, so that 115,000 includes 15,000 VAT. Okay, so this VAT is per unit of those modification Okay, because they said 115 includes the 15,000. 115 is for each modification kit. It means this 15,000 VAT is VAT on each modification kit. And the fact that it is VAT on goods that were sold, that is VAT output. Because when we sell goods, we collect money, which includes the VAT. So 100,000 of what we sold will come to us per unit, and 15,000 of what we sold goes straight to sales. And when it goes to sales, it goes out, output. That will be VAT output. VAT on sales will be VAT output. VAT on income will be VAT output. That's what I'm simply saying to you. Now, students did something that I did not understand here. They took 28%. I don't know why they took 28% when they were given the VAT amount, which is 15,000 per unit. All they had to do was just to take that 15,000 VAT and multiply it by 110. And then they would get a VAT amount. Then you decide, is this VAT amount VAT input or VAT output? As I've said, it's VAT output. So it will increase that 500,000. So even if you wrote it as 1,650,000 with no brackets, I know what you meant. You meant that it's increasing the 500,000. But if that 500,000 was in brackets, then even here, the 1,650,000 was going to be in brackets. You got it? Good. Let us move to the next one. The next one says that purchased a delivery van for two. So purchases note that you are claiming it's VAT input. And they said it's VAT inclusive before a trade discount of 5% was negotiated. Now, question is, how do we deal with this? We're supposed to have a VAT input, right? But they said we purchased this delivery van. But when we purchased this delivery van, we purchased it for 287,500. But there was a trade discount of 5% that was supposed to have been excluded from that 287,500, but it was not excluded. Basically, our VAT input here was more than what it was supposed to be. So when you calculate our VAT input, it won't be on that 287,500. It will be on the 95% of that 287,500 because the 5% was a discount. Am I making sense? So first of all, you need to calculate the cost price of this delivery van, which will be 287,500 times 95% because we have to subtract the trade discount. Once you get the cost price, then you calculate VAT, which will be your VAT input. So cost price will be 95% of that, of which it will give you how much? Let me see how much it will give us. So 87,500. You multiply that by 95, so the cost price will be 273,125. And then you calculate VAT on it. Because they said it's VAT inclusive, when I calculate VAT on that, it will be 100. And I will divide that because we bought it. And when we buy it, we are going to buy it at an amount inclusive of VAT. Because they said it's inclusive of VAT, I will divide this by 115. So that amount that I got, which is 270 something, was at 115. So I will need to subtract. Why am I multiplying by 100? I'm not interested in the cost price excluding VAT. I'm interested in the VAT amount, because that's what will determine whether it's VAT input or VAT output. VAT input or VAT output, it's all about the VAT amount. So I'm going to multiply it by 15 divided by 115. 15 is the VAT percentage, okay? So here I will just take the 273,125 times 15 divided by 115. It will give me 35,625. That 35,625 is VAT input, and VAT input will reduce what we have as VAT output. Making sense? Good. Let's move on. The next one says we returned 1,100,000 exclusive of that. So I know that is at 100% worth of modification kits to a supplier. The creator charged a 10% handling fee on their return. Note that when we buy goods, we'll have VAT input. We are going to claim VAT input on that. But here, because we returned these goods, it will reduce our VAT input, and the reduction of VAT input will be VAT output. It will result in an increase of VAT output. First of all, I'm going to get the VAT amount, or first of all, I will actually calculate the cost price of goods returned, which will be at 90%. Okay, because we got charged 10%. So 10% penalty that we got charged is an expense, right? VAT on expenses, we know it's VAT input. So you have a choice of taking 1,100,000, multiplying it by 15, dividing it by 100, because it was VAT exclusive, and get your VAT output. And then calculate 10% of 1,100,000. And on that 10%, multiply it by 15 divided by 100, you are going to get VAT on the penalty charged, and VAT on penalty charged was going to be VAT input. So after all, it's better for you to take 1,100,000 and just times it by 90%. And once you got the amount excluding the penalty, then you will simply take that times it by 15 divided by 100. Why am I dividing it by 100? Because they said it's VAT exclusive. Multiply by what you want, divide by what you have. So it's 15% is the same as 15 times 15 divided by 100. That will give me 148,500. This 148,500 will increase my VAT output. Nice, no? I know. All right, let's move to the next one. A debtor who owed 460,000 was declared insolvent. His estate has been paid 60 cents in the rent. The remainder must be written off. So basically, I don't know why they said has been paid. So normally what happens is that if the debtor has, in this case, the debtor was owing us 460, that amount will be collected by selling the debtor's assets, and then it will be kept by the estate, and the estate will give us the money. So we already got the 60 cents. We are missing the 40, which is the bad debts. Okay. Now, bad debts is an expense, and bad debts, it's like it reduces your sales in essence. It's your income going bad. And VAT on income is output, meaning that VAT on anything that will reduce your income or on any expenses will be an input. All you have to do is to first find that bad debts by taking the 460,000 and times it by 40 cents. That is the total debts times it by 40 cents. Okay, it will give you 184,000. You will times that by 15 divided by 115, because bad debts will be calculated on the selling price. The selling price will include VAT, will be VAT exclusive. Then you are going to get your VAT amount, and your VAT amount on bad debts will be 24,000. Bad debts is an expense, and VAT on that 24,000 will be VAT input, which decreases your VAT output. That's it for question 1B. Let's go to question 1C. All right, let's see how it goes. It says information relating to very nice car dealership. We extracted balances on the 28th of February. So equipment, it was 870,000. Accumulated depreciation on equipment, it was 325,000. And these are balances at the end of the financial year. All right, we know that accumulated depreciation on equipment will be the opening balance, because accumulated depreciation can't be a closing balance unless current year depreciation has been calculated. Now, they said the following transactions relate to the equipment for the year ended 28th of February 2023. On 30 June 2022, an engine cleaning machine worth 230,000 caught fire and was destroyed. The accumulated depreciation of the cleaning machine on the 1st of March 2022 was 69,000. Oh my word. So it means that we've got accumulated depreciation on the 1st of March, but this machine was used until the 30th of June 2022. So it's key that you draw the number. I mean, I'm just hoping that I drew the number wrong. No, I didn't. I didn't, so I have to draw it. Ah, man. All right. And then they said the cleaning machine was replaced on the 1st of July. So we had another cleaning machine, which we are going to use from the 1st of July until the end of the year. Okay. And it was purchased on account. Then they say depreciation is calculated at 9% per annum using the diminution balance method. Oh, yeah. All right. I'm firstly going to check what I have been given here first, all right? Normally, they didn't specify that 870. Is it opening or closing? I know the 325,000 is 500 is the open because we haven't calculated. I mean, this wants you to calculate depreciation. We haven't calculated current year depreciation, but is that 870 an opening or closing? After reading this adjustment, the first thing I will conclude that it is closing because it is the balance on the 28th of February 2023. But they didn't say anything. If they say nothing, you know that it is the closing because it means everything was already recorded because everything already took place. But before you conclude, go to your answer book and check what is already there. And when you go to the answer book, check what is already there. So now it tells you that 870 is actually not the closing, is the opening. You see now? And based on that, I can easily calculate the carry value at the beginning of the year. All right, and that will be it. It enables me to calculate the carrying value at the beginning of the year, right? We good there? Great. So that's what we will have as carrying value at the beginning of the year, at the beginning of the year. You guys, accounting is such a beautiful novel. It is just a novel. And whenever I prepare a question paper, it's like I'm telling a story, okay? They normally say don't judge a book by its cover, but you must judge it by its author, and that's what I'm doing here. I'm simply laying it for you step by step. Check this out, okay? Let's make this a very nice novel. All right. So we've got everything else. I would actually draw a timeline. And in this timeline, I will include my financial year. I will start with 1 March. Okay. It'll be 1 March. It's 2022. Okay, I don't know what's happening either. Okay, it doesn't want to respond, so I'll just say 22. Okay, I'll just write 22 there. Oh, it's not. Okay, I'll just write 22 there. Okay, I don't know what's happening there. All right, let me just try and draw it here. Right, Microsoft. So I'll have 1 March, but it'll be 2022. So I'll write 2022. The end of the year is the 28th of Feb. But this will be 2023, right? So this is my financial year. And then you put in the key dates, all right? First of all, I'm gonna say we're gonna have three assets that needs to be depreciated. The first one will be the old. Okay, so the old means we are going to depreciate it for the entire financial year because we have had it for the entire financial year. And this one will have accumulated depreciation, right? That is the green. Green means old, right? I'm going to change color and put in blue. Blue will be the one that was destroyed. Basically, it was disposed in June. So June will be around okay, I went a bit far. So June will be around here. So this one, we are going to depreciate it until we stop using it, which will be the 30th of June. 30th of June. Guys, it's not Jan, it's June. Okay, it's June 2022. So for how many months did I use it? I use it from March. So it was March, April, May, June. So I've used it only for 4 months. So this one, I'm going to depreciate it for 4 months. So whatever I depreciate it by, I'm going to multiply it by 4 and divide it by 12. Okay, this is the blue, which is the disposed one. So we had it there. It will have accumulated depreciation at the beginning of the year, which is that. They also gave us the cost price of this asset, which is that over there. When I change it and put another color, I'll run out of colors now. Let me choose this one here. Then we've got another vehicle that was bought on the 1st of July, which is pretty much same day the other one was destroyed. But this one now, it doesn't have accumulated depreciation. It is new. So when you calculate depreciation on it, we'll just times it by the depreciation rate. And then the depreciation rate here is 9%. And then we're going to times it by, it's from July, August, September, October, November, December, January, February. So basically it is 8 months and then divided by 12. But we don't know what the cost price is. All right. And we're going to get to the calculation of cost price because I think that's what is asked in the next question, which is this question here. They will ask us to calculate depreciation of equipment that was destroyed. First of all, I need to know the method of depreciation. That's the first thing that you need to know, which is diminution balance method. So for any equipment that I depreciate, I need to know its carrying value. Um, for the for the asset that was sold, the carrying value at the beginning of the year, that's what you need. Carrying value at the beginning of the year will be that 230 minus accumulated depreciation at the beginning of the year of 69,000. That will give you 161,000. And then you take that 161,000 times it by 9%, times it by 4 divided by 12, it'll give you 4,830. That 4,830 is current year's depreciation. So you will add it here under depreciation. We good? But it was sold. So it will fall under disposals. And the cost price of this asset sold was 230. At the beginning of the accumulated depreciation was 69. So it has increased. So by the time we sell this asset, accumulated depreciation, remember, accumulated depreciation is increased by current year depreciation. So you are going to take 4,830, increase it by current year. I mean, it was 69,000, sorry, it was 69,000. You're going to increase it by 4,830. So accumulated depreciation on the date of sale will be 73,870. So carrying value on the day we dispose this will be 230,000, and then you minus that answer. So carrying value will be 156,170. Or you could just do this. You can just subtract accumulated depreciation at the beginning of the year. It will give you carrying value, but carrying value is reduced again by depreciation of the current year. And that's how you will get your carrying value at the date of sale, which will be 156,170. Please check my videos on tangible assets. Check under podcast. I have them there, and you also can check them under question papers. where I discussed this in details. I think it's November 2022 and April 2023, April 2023 for this year, right? I discussed this thoroughly there in case you're getting lost. All right. So that's what I've got there. And let's move to the next question. The next question wants us to calculate depreciation on the remaining assets or equipment. So for the remaining equipment, we first need to know the cost of the remaining. So you will take cost at the beginning of the year minus cost of the sold. It will give you cost of the remaining, right? And then you're going to take accumulated depreciation of all assets at the beginning of the year, which was at 325,500. Then you minus accumulated depreciation of the assets sold at the beginning of the year, which was 69,000. Then you will be able to calculate carry value at the beginning of the year, which will be 383,500. I got it by taking 640,000 minus 256,500. Then you're going to take that carrying value and times it by your depreciation rate of 9%, times it by 12 over 12. That will give you 34,515. That 34,515, you're going to take it to your tangible assets note and add it to depreciation. So now we've got depreciation of the sold, depreciation of the remaining. We are left with which one here? We are left with the depreciation of the new, which is that one there. Is it orange? Yes, the orange one. So whatever we have as a cost price, we will just multiply it by 9% and multiply it by 8 over 12 because we've used it only for 8 months. But now we first need to find the cost. To find the cost, you have cost at the beginning of the year, you minus cost of the sold, then you add cost of the new, which is X, we don't know it. It should give you cost at the end of the year, and cost at the end of the year was also given to you as 1 million. So that should give you 1 million, which is cost at the end of the year. Guys, from here, you just manipulate the formula, right? Which will be cost of the new will be 360,000. So you just take 1 million plus 230,000 minus 870,000. It'll give you 360,000. Remember that 230 when it comes to this side, it'll be plus 230, and that 870 when it comes to this side, it'll be minus. Please don't judge. All right, and it'll give you this 360,000. Guys, as I'm doing something, I'm recording it immediately. I don't waste time because the next question might confuse me and then I'll end up not recording anything. So I'm recording as I go. All right. And that's what you're gonna have, guys. It'll be 360,000. You put it under additions. Now to calculate, because we only have to do the depreciation of that one. To calculate depreciation of that 360, which is times it by 9%, times by 8 over 12, it'll give you 21,600. That 21,600, I'm going to put it and add it to depreciation. All right. Note that disposals and depreciation, always put them in brackets. Then take the 360,000 minus 156,170 minus 60,945. It'll give you a movement, which will be 142,945. Then you're going to add that with what? You're going to add it with that. So that plus that will give you this. But before I calculate carrying value at the end, I will first subtract carrying value of the sold, which is, depreciation of the sold, accumulated depreciation of the sold, which is this one here. You will subtract it from accumulated depreciation at the end of the year. So those two will give you 73,830. And then you add This year's depreciation of 60,945. It'll give you carrying value at the end of the year. Then you will take cost at the end of the year minus carrying value at the end of the year. It'll give you 687,345. As I showed you, you can just take that, add it with this one. It will still give you that value over there. And 10 marks for Mahala for free, just like that. So if you take that and you add it with this one here, it will give you that one thing. You can use this as a cheat method. 1 million minus 687,385 will give you that 312,615. Don't try that at home, please, or in the exam. All right. That will be it with respect to question one, right? This is just me. I'm just doing a bit of revision here. Try this one out on your own. It's supposed to last you for 29 minutes. Okay, so this is the question. Okay. Um, from all of this, you can screenshot probably and then put them somewhere and then print them out. You pause, you screenshot, you put it in a document, you print it out, and you just have to prepare this. And check out the next video for solutions to that. All right. This is us just preparing for tomorrow's exam. All right. Till later. Khotso.